Well, folks, welcome back. I'm really excited to have Josef Schachter, our go-to energy guy, on the line. I'll tell you, obviously, this was a wild and crazy week in the markets with the stock markets down hard, the bond market scaring people half to death, the U.S. dollar falling like a stone, and we hit $55 on WTI crude in the middle of the week. I mean, it's just been a wild and crazy period of time. So, Josef, I hope you're braced and ready for some action here. What did you think, of the macro environment this week? And I'm asking you that because I know that's got a real bearing on the way you look at the crude oil market and also the companies that are in that space.
Yeah, we've had, this kind of cathartic market that everybody's saying it's tariffs. It's the inconsistency of the government in the U.S. in terms of what they're doing. On Friday, China increased their tariffs on the U.S., which means it's uncompetitive for them to buy much from the U.S. But the key thing I'm looking at is that the market was overvalued. We had the AI craze. We had the FANG craze. We had, GameStop in the past, where stocks just get so crazy versus the intrinsic value. And so we had a market that had a bubble in it, and the tariff problems, rising interest rates, a 10% increase in U.S. 10-year treasuries over the last week. All of that had the ability to punch the balloon. And that's why we've seen the market correction over the last couple of months. I think we're, let's say, if using the golf analogy, I think we're in the back nine, maybe on the 12th, 13th hole, and there still is some more damage, I think, coming because these overinflated AI stocks still have some air in them. But I think that during the periods of weakness, we see energy as extremely cheap. We have three things we watch for buy signals. And historically, when you get to bottoms or corrections, you might get one signal kicking in or two signals kicking in. We got all three. And I'll quickly give over what they are. One, the price of oil gets below economic value in terms of spending money to drill. That comes from the Federal Reserve of Dallas. There's charts that they have that you can see. Mid-60s is the number. So when we got down last Friday, down to $62, we sent out a buy signal with more buy recommendations, individual names. The second one is the TSX Energy Index got down to very low levels, below 230, and we said that was a level that we thought was very cheap. The third one is the most important of the three, and that is the bullish percentage index. And historically, at market highs, it gets to 90% or higher. Anytime it gets below 10%, it's a buy. Anytime it gets below 5% bulls, in other words, nobody wants to buy the sector, that's the table pounding buy. In March of 2020, that got down to 3.7%. On Monday, that got to 0%. The only other time in the history of that index was in 2008 when it got to 0%. So we have all the valuation issues that we like to see on bargains. The fact that nobody wants to go near it, the bullish percentage index, all of that tells you that we're in bargain territories. So the question is, do you want to own big cap? Do you want dividends? Do you want to own royalty trusts? And so there's, you want to own service sector. And we think there's buys right across the board. And I haven't had a table pounding buying discussion with you since March of 2020. There's been corrections, there's been rallies, but this is the first time since March of 2020 that we can say that we have a table pounding opportunity in the energy sector.
Well, when you speak of, I'm going to call it the COVID panic in March of 2020, that was the last time we saw crude oil down around the $50 mark. You did put out a strong buy recommendation at that time. I remember that we had the World Outlook Conference in person that year, but there was this worry going around about the COVID thing, and the following year we're on video. We couldn't do it in person. I've seen here, Josef, just taking a quick look around the board, that a lot of the oil stocks or the indices of oil stocks, or the ETFs, that sort of thing, are down anywhere from about 15 to 30% since just the beginning of the month. I mean, that's only 10 days ago. They're at 2 to 4 year lows, whether it's Exxon or some much smaller company, they're all taking a beating here. When I see the stock market and the bond market and the U.S. dollar all weak at the same time, That's really a powerful signal to me. And we did see an about face, as it were, from the Trump administration, where he came in and said, okay, we're going to back off a bit here. We'll have a 90-day pause and all that sort of thing. So the market's having a little bounce here at the end of the week. You're still thinking that maybe we dip lower next week or the week after, and then so it's over the next couple of weeks. People ought to be looking at buying opportunities, especially in the energy sector as you follow it.
Yeah, on down days, we're seeing, I was having a chat with my daughter and saying 3 weeks ago, you're going to see 1,000-point moves on the Dow. And she was saying, wow, it was 100, 200 points. And then when we saw 1,000, I said, we're going to probably see 2,000. And then, of course, yesterday we saw 3,000. So, we're seeing big moves. Percentage terms, not as bad as 87, but we're seeing some big moves here. My guess, my expectation over the next few weeks is we're going to try to build a bottom here. And on down days, we recommend people buy stocks. There are many stocks, and we can talk names if you want, that are high quality companies, with strong balance sheets that are paying either monthly or quarterly dividends over 10%. Over 10%. In my history of my career, I don't think I've still seen that before. You might got to 7 or 8% at market bottoms, and then sometimes companies would have to cut the dividend if it stayed bad like it did in 08, 09. But I don't think I think this is very temporary. Right now, everybody's worried because of tariffs and slowing trade and whatever. OPEC raised the production for next month by 430,000 BOEs a day. The key thing from my point of view is in the fourth quarter of this year, the sanctions against Iran and against Venezuela will be kicking in. If there's no success with the Iranians negotiating this nuclear deal, the American sanctions will get tougher on them. And if they lose 1.5 million of their 3.1 million of production, they can't export. And Venezuela's already been told, you can't export. Chevron's been told, close down your operations there. India has already, Reliance Group, which is the biggest refiner in India, has already said, we will not buy Venezuelan crude. You take 2 million barrels off the market in Q4 of 2025, and all of a sudden, even if 400 or 500,000 comes on from OPEC, 200 or 300,000 from elsewhere in the world, even if there's no increase in demand in 2025, which I don't agree with, I think there will be demand increase. We will see a shortage by Q4, and I think that lifts prices into the high 70s, into the low 80s during Q4 25, and that pushes us into the $90 a barrel in mid 2026.
Well, of course, the worldwide oil market is pretty tight in terms of we're maybe producing 104 million barrels a day and consuming 105. So if there's $1 million, a million barrels, swing either way, it makes a big difference. But that was interesting because I've seen your forecast. I read your Ion Energy report every week. And folks, I'll tell you what, you can go to Josef Schachter's website, just Google Josef Schachter, you'll find your way to his website, and you can subscribe to Ion Energy for free. It gives you a real good taste of what Josef is doing, what he's looking at, why he thinks what he thinks. And then if you are really interested in subscribing to his services, that's an additional thing, and we'll come back to that in a minute. Well, actually, that's a good lead-in. You have your views on what that price is going to be of crude oil and why it's going to be where it is. At natural gas, the same sort of thing. But what you really specialize in is picking the companies that are going to do well in the environment that you see ahead. So you just said, you could give us the names of a couple. Why don't you do that? Up to you, one or two, and the reasons why you like them. And then I'll come back with the information about how people can get a discount code if they want to become a subscriber to your service.
Yeah. So the paid product is the company specific. The macro product, Ion Energy, is for free, and that's a way to communicate on a weekly basis because things are moving so quickly. And we talk about the economic factors, what's going on with OPEC, what's coming from the EIA, and then what we see from the market side impacting the price of oil. The company specific, we cover 37 companies. pipeline and infrastructure and royalty. We cover E&P companies that are domestic, Montney, Duvernay, SAGD companies, heavy oil in Canada, some companies that are Canadian domiciled but work internationally, and then in the service sector. But I'm gonna throw some names at you that are just to show you how cheap things are. A freehold royalty, which is one of those royalty income trusts, pays a monthly dividend of 9 cents. It's over a 10% yield, and it's been paying that 9 cents for a long time, and their production is going up. So that's a very cheap stock that we think is a name to go after. Whitecap Resources is merging with Varen, and it's going to be one of the largest energy companies, E&P in Canada, both in the Montney and in the regular oil side. Today, Whitecap is at $7.63. That's almost a 10% yield, 73-cent dividend. So it's just unbelievable what you can get in some of these very strong companies. Africa Oil, a company of 32,000 BOEs a day. We launched coverage on it a few months ago. The company pays a quarterly dividend that's 21 cents, and the stock is trading in the 180 range, I think. Today, it's 169. It's backed off 21-cent dividend. That's a 12% dividend yield. And then Surge Energy, an oil company, 24,000 BOEs a day, paying a dividend of 52 cents paid to you monthly. The stock today on Surge is trading at $4.55. So you're looking at 12% yield. So there's fabulous companies out there paying very good yields, liquid names, and strong balance sheets. And what I recommend to people is, number one, if get our research to get the information, why we like it. We do it from a retail perspective, not the 30-page reports you see from the institutional side. We say why we like the name, what's a good price to buy it at, where do we see it going 12 months from now, but more importantly, where do we see it going in the bull market super cycle, the commodity super cycle that I believe will last into the end of the decade. We're seeing copper do well. Gold's been a stellar performer. Gold stocks have done well. Uranium's had its up and downs, but they're going to come back again because there'll be a shortage, physical shortage of uranium. And I think energy is going to be a laggard, but it will at some point get back up into the over 100. And I think a spike up on maybe some disruption of supply in some country, just like we had in 2008, where we ran to $147. You saw when we had the Russia invade Ukraine, we popped up to 130. So I think we'll see all-time nominal highs before the end of the cycle. But right now we're in the depths of weak prices, and people are worried, is it going to go much lower? It can't, because the industry will slow down, stop drilling, and declines will occur. And from the EIA data from last week, the U.S. production numbers fell 122,000 from 13.58 million barrels to 13.46 million barrels. So we're already seeing that the prices as we see today are impacting production in the U.S. So while Trump is saying, I want low prices and I want you to drill, baby, drill, you can't have both. You want low prices? Yes. But then the industry is going to shut down, because if they can't make an economic return, and right now companies in the oil patch are being driven by shareholders to do the right decisions and do shareholder returns, which means dividends and stock buybacks. And if you can't generate enough cash flow to keep production flat and deliver on the shareholder returns, you're going to get pressed by the shareholders, and that's happening quite a bit. And companies are now reacting, saying, we will not grow the business at these kind of commodity prices, and we will make sure we keep a strong balance sheet and do our shareholder returns.
Josef, I've been to the last 6, I guess every one of your annual conferences that you have in Calgary in October. I'm always amazed, and I'm happy to say this. I am always amazed at the technological advances that is going on in the energy sector, basically in Calgary, in the oil and gas side of things. A thought occurs to me right now. It's important when people listen to what you're saying maybe look at a buying opportunity here over the next couple of weeks, but you're thinking you're going to be buying here and holding it for a year, a 2-year, that kind of a time frame. You're not looking to flip out of it by the summertime, right?
No, I'm looking at everything from a multi-year perspective, and I have investments that I made in March of 2020 when we had the bottom. I still own those.
Hmm.
And, yes, they went up and they were higher a month or two ago, but I'm saying they're going to be multiples of what they are today at the end of this cycle. So to me, I'm not a trader. I'm not skilled at that set. My job is do the homework, evaluate the companies, figure out what they're worth. We do NAV calculations that are separate from the ones that the companies do. We use flat pricing versus they use escalating price decks, discount them back, and every company uses a different one. So we take the same price deck for every company we cover, and then we find out what the bargains are. What's interesting, there's three numbers that people watch. Proved, developed, producing reserves, which means if they don't drill another well, what's the value of those reserves over time? That PDP, banks lend against that 50, 60%. Companies are trading today below PDP. Then you have proven non-producing, which means 1P, which is proven. Then you have proven plus probable, which becomes 2P. At the bottom of market cycles like today, we have companies trading below PDP. At the top of market cycles, they trade at 2P or higher. And that difference can be a 3 or 4 or 5 bagger from the price we see today.
That's amazing. Now, listen, I did mention we've got some discount codes on mikesmoneytalks.ca. So I'm saying, make sure you read Ion Energy. That's free. And as Joseph says, gives you a macro overview. If you want the names of the companies and the reasons why he's saying buy this, buy that, go to mikesmoneytalks.ca, and the discount codes are there for you to get a special rate because Joseph's a friend of Money Talks and has been for years for the subscription services. Joseph, before we take a break here, I've got a little bit of not a bee in my bonnet, but I'm actually really interested in natural gas. And of course, we're going to start to export nat gas off the west coast of British Columbia this year. It's been about 150 years in the works, but we finally got to that point. If people were particularly interested in a natural gas company, and I know you recommend like a portfolio of stocks as opposed to putting all your eggs in one basket. So I'm not saying that, but is there a natural gas company that really catches your eye?
Yeah, there's quite a few companies that are either natural gas with liquids, and of course the liquids are needed. Condensate goes to up to Edmonton and then is mixed with heavy oil and shipped in the pipeline. So there's companies that are there that have liquids and the different products that come with it. If I was to give a number of names here, the biggest one would be Tourmaline, which is 600,000 BOEs a day. It's a market cap of 25 billion. And the company pays a 50-cent dividend, $2 plus extras, specials. Paramount Resources is another company. The company just made a big sale of assets to Ovintiv, and the company, gives you a dividend of a nickel a month, so 60 cents on a $14 on a $17 price tag. Then I'd go to the white cap Varen merger. They're going to be very big in liquids, and as I mentioned, a 73-cent dividend paid to you monthly, with the stock trading today at $7.62. So you're just under a 10% yield. And then I'd give you names like Bonterra Energy, Birchcliff, New Vista. So we cover a lot of names. And the question is, do you want dividends or do you want more growth? Kawitno is another name, which is a growth story, but without a dividend. New Vista's without a dividend. So individual investors can go to our research, look at the mix of companies between their liquids. Are they paying a dividend? How big is that dividend? Because the trade-off you have is you can get more growth or you can get some growth with a dividend. That's the trade-off investors have to do. A lot of the investors that we have that are subscribers want both. They want to get paid more than they can get in the bank. So if you can get 3-4% or whatever the yield is, the different bank deposits that you would normally do, and then you have a free pass on the growth upside over the next 3 to 5 years. If we have more LNG and the price of natural gas goes from, let's say, $2.70 to $3.50, $4, you get that for free because you're getting paid enough during every quarter or every month versus what you'd have in the bank. And then you have the growth opportunity to believe, if you believe that the Canadian resource sector, the energy sector, both oil and natural gas, are going to do better in the future, then there's lots of opportunity. And we think that investors should have some portion of their portfolio in the resource sector, and in particularly the largest portion of the resource sector from the point of the TSX, which is energy.
Joseph, that's a beautiful wrap up. Thank you very much for that. Thanks for coming on the show. I look forward to going to Calgary again this October to see the conference you'll be putting together. Folks, Joseph has been a friend of Money Talks here for, I don't know, it's 15 years, Joseph, something like that, maybe more. I'm
pushing more than 20 now.
More than 20. Okay. So we keep having him back because we love him and he does some great work. So Josef Schachter at Schachter Energy Report. Go to mikesmoneytalks.ca to get the discount codes for subscriptions to his services. And Joseph, thanks for being here.
My pleasure as always. It's good to be with you, Victor, and we'll look forward to seeing you in October.
I'll be there. Okay, folks.
45 companies are coming.
Oh, super. Good. Well, it's always a great show. Folks, we're going to take a quick break and we will be right back.